Bittensor closed Q1 with institutional capital and real AI usage both in the frame. The difference from a pure narrative trade is that the supplied numbers combine large allocations with reported network revenue. Institutional case gets is the hook because the confirmed event creates a specific pressure point. Nvidia staked $420 million in TAO with 77% locked, while Polychain added $200 million in exposure during the same quarter. The measurable anchor is $620 million capital, and the story turns on capital inflow rather than broad hype. Instead of treating the headline as a market mood swing, this segment follows the mechanism that makes the change matter and the next signal that can prove whether the story is moving forward. The confirmed baseline is this. The network generated $43 million in AI usage revenue in Q1, with subnets such as Shoots and Targan serving functional API demand. That detail gives viewers the frame for the rest of the story. It shows what is already known, which actors or assets are involved, and why the event is not just a random market headline. For this story, Bittensor and TAO sit inside a process where ETF path can change the readout. The baseline also defines the boundary. $620 M capital is usable evidence, while anything beyond ETF path still needs follow-through. The important part is to keep the evidence tight before moving into what the change actually does. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is where institutional case gets becomes useful. ETF filings from Grayscale and Bitwise could create a regulated access route, while subnet scaling expands the network's AA service capacity. In plain English, the event matters because it changes the way access, risk, settlement, liquidity, governance, or infrastructure works. In this case, the stress point is AI revenue, which is why $620 M capital is a signal rather than decoration. That is why the segment spends time on AI revenue before discussing impact. Without that mechanism, the event is easy to misread. The headline may grab attention, but the mechanism explains why traders, builders, users, or institutions have to care about the next step. The impact lands with a specific group, not with crypto as a whole. Institutions, TAO holders, and AA infrastructure traders are affected because custody, ETF access, and usage revenue can broaden the buyer base. That is the practical consequence. It may affect how users move funds, how institutions manage compliance, how traders price liquidity, how developers build, or how risk desks read the market. The affected side is tied to TAO and Bittensor, so the scope stays limited to what the supplied facts support. That narrower read is more useful than a sweeping market claim. The open question is just as important as the confirmed fact. The spot ETF is still pending, and institutional interest does not guarantee approval, liquidity growth, or token performance. That means the story should not be read as a guaranteed outcome. The proof standard is simple. The next signal is the SEC decision window tracked for August 2026 and continued evidence of real subnet revenue. Until that signal appears, the confirmed development and the unresolved part should stay separate. A stronger claim would need Bittensor or relevant market participants to show follow-through around ETF path, not only reaction around TAO. That prevents a useful news signal from turning into speculation. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal for institutional case gets is concrete. The next signal is the SEC decision window tracked for August 2026 and continued evidence of real subnet revenue. If that signal appears, the story has new evidence. If it does not, the headline may remain smaller than the early reaction suggests. A clean follow-through would connect $620 M capital to visible action, usage, compliance, liquidity, or technical progress. For viewers, the usable close is not a direction call. It is a checklist tied to $620 million capital inflow, and the specific trigger above. The final readout is practical. Track the next verifiable step, not the loudest claim around the asset, rule, protocol, or market move.